Hello, everybody. Brandon Korgan, Realtor with Highlands Elite Real Estate, here with you today. I'm excited to be joined by Lynn Sceduri here in Cookeville, Tennessee. She's with U.S. Bank. She's a loan officer. She's also their sales supervisor, and she specializes in land loans and construction-to-perm loans. So we're going to take a few minutes today to kind of dive into that realm and see what we can take away from this. We're going to jump right in, but first of all, thanks for being here, Lynn.
Thank you for having me, Brendan. I appreciate the opportunity to share some of this information with you and your clients or your fans or whoever they might be out there.
Out in the ether. Y'all, we have so much to learn. Lynn's bringing like 30 years of experience, I think. Not to date her, but she's probably forgotten more than she'll ever know. And we're going to tap into that. So first of all, let's talk about the process of buying land, then buying or constructing a home, and the time frame of everything. When do we get started on these dreams and visions?
Well, from day one, I would say, let's do it, right? You can't make a decision unless you have looked at the pros and cons. Can I do this? Is it feasible? Is it within my budget? So talking with a lender to get started to determine what price range you'd be qualified in, partnering with a realtor who's going to show you what land is available and help you through that process is key also.
Is it ever too early to start speaking with someone like me or even someone like you?
No, even if your plan is a year from now or 2 years from now, wouldn't you rather know so you can work towards that goal and get there?
Absolutely. Here's another thing that's good to know, folks. A little dose of reality. Lynn, is it going to be cheaper to go out and just buy a piece of land, build a custom home, or would it be maybe less costly sometimes to get something that's already built? Because I know I get approached with both understandings.
I think there's a misnomer that it is cheaper to go ahead and do it yourself, to buy the land, get the house built. It's cheaper. I hear it all the time. And there's a reality check when the borrowers do get their figures from a builder what that cost actually is. I would say that our market is pretty stable with new construction prices. We've got a full range of products that are already existing new construction. So unless it's a dream home that you want all the bells and whistles that is not out there, you're still going to pay for it. It's not necessarily cheaper.
Mm-hmm. Folks, it's going to cost you to buy land, build your dream home, and live the life. But we expect that, and we need a little help sometimes, which is really what Lynn does. And part of that process is getting the land financed for some people. Tell us a little bit about that, would you?
Absolutely. So there are land loans available. Each lender might have a different type of product. They may also have different terms. My land loan is an adjustable rate mortgage that is a 3-1 ARM, amortized over 30 years. It does not have a balloon payment or a prepayment penalty. So if the borrower wanted to pay it off or roll it into a construction for the new home, we can do so and get that paid. The land loan is for residential properties. So it's not large farms, it's not, I can't do those, but there's those types of loans out there. Some terms are shorter, like a 10-year or a 15-year term, or they might have a balloon payment. Our loan allows for the acreage up to 20 acres, residential in nature. If it has electric and septic already at the property, it's considered improved. If it does not, it's considered unimproved. So the minimum down payment on 10 acres or less is 20%. Unimproved is 25%. If we go larger on the size of the parcel, the down payment could go from 35% to 50%.
Okay. Beyond the down payment, are there certain things such as, credit history, debt to income, employment? Are you looking at that whole picture?
You are. You're always going to look at that when you're getting financing for something from a bank, right? They're going to look at your ability to repay the debt. Mm-hmm. The good thing on land loans, typically, they cost a lot less than a full home. And so that payment could feel like a credit card payment, even though it is principal and interest repayment.
Mm-hmm, mm-hmm. So let's focus in on like the employment history. Do you have to be in a certain position, certain employer, or a certain field for a certain amount of time?
Great question. So Each specialty type loan is going to have different requirements, but usually a borrower who has 1 to 2 years employment history, if they are W-2'd employees, that's perfectly fine. If they are self-employed and they are running their own business or they're a contractor, they need to have a 2-year history of that reported income. So typically you have to report your income on your tax returns for a lender to use that. There are some lenders out there that will do stated income loans or what they call a bank statement loan. They look at your deposits from your business. That is not something that I do, but we do have multiple options to qualify a borrower. You do not have to be employed. You could be retired and receiving Social Security or pension or disbursements from your individual retirement account.
Thanks for remembering us independent contractors. Thanks for thinking about our retired clients and viewers out there. Not everybody's on a W-2. If you are, you're lucky. I guess we choose not to be. Good information. That gives us enough to kind of get started on understanding what's going to take you to get you into a land loan. Now let's say you want to go ahead and live out there. What can we do to get a house build funded?
Absolutely. So part of the beginning process is the design of your home, what you want out there. So finding your plans, talking to an architect, getting that designed. Then once you've got that completed, you can speak with a builder to get a cost estimate of what it's going to cost to build the home. The land value that you may already have, either you purchased it years ago, there's no lien on it, or it was gifted to you from a family member or an inheritance, that land equity can be used towards the down payment towards that loan. So if you've owned the home or owned the land less than 12 months, it's going to be what you paid for it, or if it's a gift, the appraiser is going to determine the value. If you've owned it greater than 12 months, the appraiser is going to determine the current market value.
Let's talk about the builders that are going to be involved in this project. Are you going to work with any builder, or are there certain requirements as far as they go?
We prefer to work with a builder that is experienced, right? So a minimum of 3 years in business with a general contractor's license required by the state of Tennessee. They could be working for another company and move out and become self-employed. So long as they've got a general contractor's license, and we know that they're building homes. Sometimes they're remodelers and then want to build homes, but we will work with them. We will go through the builder review process with them. I am happy to talk to them at any time, along with the consumer talking to them about hiring them to build the house. Self-build. So Brendan, if you said to me, hey Lynn, I want to build my own house, it's not your line of business. I'm going to probably say that's going to be real difficult for us to get you reviewed to allow you to build with us, but it doesn't mean other lenders won't. It just means we won't. So we like to have somebody that is separate from the borrower, so not a family member, right? A family member, if you get into a dispute, if you have a fight, they might walk off the job and not come back. A builder, reputable builder, is going to finish the project no matter what. They're going to work out any conflicts with you to make sure you're happy, and they're going to work with the lender so that they get paid.
Fantastic. So let's kind of go over this. We've got our land now. We've got a builder. We've got some plans. It looks like there's going to be some financing available to us. Can you tell us a little bit about how the disbursement of those funds kind of plays out through the build?
Absolutely. So as we talked a little bit about the equity in the land, plus the builder's quote to build the house, those two are the total acquisition costs, right? We're going to calculate the down payment requirement based on that. It could be anywhere from 90%, 80%, 70% loan to value. So that land equity can be part of that investment. Once we have physically closed, we allow a disbursement to the builder up front to get him started on the project. And then we'll do a disbursement every 30 days based on work that's completed on the project. So the builder will then submit a request for funds when they're ready for a draw. That draw process requires the borrower to review and agree that they're ready, like they know that this work's been done. We also send an inspector out to verify the work has been completed. And then if all is good and we get title rundown, everything looks good, the funds will be wired directly to the builder.
It's so important to have the right mechanisms in place to assure that your project is being handled professionally and people are getting paid for work that's done and done properly. That's a big concern of mine, and it's always good to know that you've got not only a professional builder, hopefully you've got your county coming in, doing a couple inspections, making sure everything's on track. You've also got folks like Lynn and her team making sure this is all coming together for you too. So you're not just out there rolling dice, throwing big checks around and throwing caution to the wind. I can't tell you enough about how important that is. So let's go ahead and talk a little bit about maybe the different kinds of loans that you would have available, like a one-time versus a two-time close. Can you tell us a little bit about something like that?
Correct. So we offer a one-time close, construction-to-perm loan. So we do everything for the borrower approval up front. We credit qualify them. We get the appraisal done on the home based on the plans and specifications. We calculate the money that they need to put into the transaction for down payment or investment, if you want to call that, plus closing costs. Once we close on the loan, the borrower already owns the land. Construction can start within days of closing. They already own the land and the home, so when the home is completed, they can move in right away. So a one-time close loan does not stop them from being on property. They can be there. If the two-time close loan, they do a construction loan, they get maybe a lower interest rate, but it's a temporary short-term loan. It might only be 12 months. Then the borrower is qualifying for that. When the house is finished and built, now they have to refinance into permanent financing.
Can you tell me a little bit about why somebody would choose a one-time loan versus a two-time loan?
Yep.
Or two-time close, I should say.
Two-time close. Usually it is the speculation of what the interest rate will be in the future when they're going to refinance. Or their lender that they want to use doesn't offer a one-time close. So the interest-only portion up front is easier to stomach, that payment, while the house is being built, versus knowing exactly where we're going to be. So I've had customers who've come to me, didn't move forward with the one-time construction to permanent loan that we offer, go to another lender, and come back to me when the house was finished and the interest rates were a lot higher. That happens. So we're locking the interest rate up front for the life of the loan. At the end of the construction phase, and we offer 3 different construction phases, 12 months, 15 months, or 24 months. Interest-only payments during the build of the home, so the borrower is not paying out 2 mortgage payments. They're just paying interest only on the funds being dispersed to the builder. At the end of the construction phase, the loan automatically rolls or converts to principal and interest repayment on the remaining term. So if it's a 12-month construction phase, principal and interest payment will be required on 29 years. So they're not paying interest all over again.
Nice. The interest. Nobody likes to pay it. Sometimes we have to. Well, what can we do, folks? We've got a lot already in front of us. Let's keep moving forward. Anytime you have a project like this, there's the risk of running over budget or incurring additional costs that we didn't plan for. How do we handle that?
I like to have that conversation with the customer up front, right? Knowing what their cash flow might be, what they've got for additional savings that they're not putting into the transaction. So if we always assume that worst case it's going to go over budget, then do you have other investments that you can use? Or if you choose to make an upgrade to a product, say tile styles or the materials that you went from carpeting to hardwood, the cost add-on, do you have that extra money to bring to the transaction and pay the builder directly? Or should we build in a contingency reserve? So a 10% or more contingency reserve built in gives that borrower peace of mind that they've got a cushion already built in should the project go a little bit over. And if it goes over in one line item but saves money in another line item, you can transfer that extra money to the line item that was short.
That's good to know. That's actually a question I had because I wasn't sure of that. Now, how long can these be locked in for, the rates that is?
That's a perfect question. So we're going to lock the rate and close the loan. So it's your normal 45, 60, 90 days up front, lock the rate for the life of the loan. So when we close, It's already locked. If the borrower chooses at the end of the construction phase to pay off the loan or to pay down the principal balance, we offer what's called a recast, where they can recalculate their mortgage payment based on that original interest rate we locked, the new principal balance, and the remaining term. So let's say now it's 28 years and 6 months. It's going to be calculated principal and interest on the remaining term.
There you go. Locked in, folks. No surprises here. Let's go ahead and move along to end loans. Similar but different. Tell us a little bit about end loans, would you, Lynn?
Absolutely. So there's an end loan is where the builder owns the land. You don't own the land where you do in a construction to permanent loan. The builder owns the land. He's going to build the home for you, and at the end of the build, you are going to purchase the home. So that could take 3 months, 6 months, 9 months to build that home. If it is a spec home that's already built, new construction, close in 30 to 45 days, right? If it is start from the beginning, but again, the builder owns the land, you're going to get the keys when the home is completed, and you're going to close on the loan at that time. So that's an end loan.
In a nutshell, folks, if you're looking at a new build, there are so many things to consider. Fortunately, there are so many options that you can explore. What you're really going to want to do is get with a realtor who's familiar with this, and you're going to want to get with somebody like Lynn here, who's got over 30 years in the industry, knows it inside and out, and can get you started on the right foot, on the right path, and see you through from start to finish. And know Lynn, she'll stick with you even beyond that. You'll probably come out with a new friend. Lynn, we're getting short on time, but I want to open the floor. Is there anything else we want to touch on real quick before we call it good for this session?
I appreciate all of the questions. I probably would just say that, again, sometimes it costs more than we're expecting it to. Sometimes there's a little bit back and forth. Sometimes it takes a little bit longer than we think. I'm working with customers 1 to 2 years sometimes on construction loans. So once you start, call. You make a decision. You're going to do this? Call somebody to go through the details ahead of time. That way you're not feeling, I want to close yesterday. I want to close yesterday. It will take longer. It could take 3 to 6 months before you even can meet with a builder. And then once you meet with that builder, it could take another couple of months to get your final figures, your final details, your final plans. So this project is not, I'm going to do it today and get in my house in 30 days.
That's right, folks. Get out in front of it. Get with a professional and anchor your expectations in reality and expertise. And that's what Lynn's here to do for you. I'm here as well. We've got our contact information below. Don't hesitate to reach out at any point in the process and give us a call. Until then, have a good one.
Thank you.